I just request everybody to come forward so that it would be better for everybody. And before starting, I just request everybody to first rise for the motto.
Yeshasupteshu jagrati Yeshasupteshu jagrati Kamam 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 Pursho nirvimanaha nirvimanaha Tadeva shukram tadbrahma
Today we are having with us two eminent speakers, CA Sumit Padia ji and CA Tahir Siddiqui, who is going to take us on the topic of FATCA CRS. And so without wasting much time, I will request our past convener and senior member, Vanna Madam, to formally introduce both the speakers.
So, warm good evening to one and all present here. It's my pleasure to introduce today's two eminent faculty. First is Sumit. He's a tax professional working with EY for over 16 years now. Across these years, his expertise has been assisting in corporate tax, international tax and FATCA credits to financial services clients across BFSI sector. And the second speaker, Tahir. Please, round of applause. Mr. Tahir is a manager at Ernst & Young with over 4 years of Big Four experience in corporate and international taxation. For the past 3 years, he has specialized in the FATCA and credit domain, advising clients on regulatory compliance, reporting obligations, and cross-border tax transparency requirements. So, presenting before you, Tahir, and may I request now Jawad to present a memento.
And we also present the contribution to CABF on behalf of Study Center. So, thank you. So I would request to
First of all, thank you, Vandana Madam, for the warm introduction. Before we jump into the entire concept of FATCA CRS and what it is all about, right? Wanted to first give a brief flavor of why this law was introduced, right? Before 2014, what was happening is a tax resident of a particular country, when he was earning income from another country, while he was getting taxed in that host country, he was not offering income to the home country, right? And that's why the home country was at a loss in terms of revenue. Looking at this and looking at the quantum of tax evasion that was happening, first the US government brought FATCA, which is Foreign Account Tax Compliance Act, into picture in 2014, and following suit the OECD introduced CRS. And we all will be shocked to know that till date they say that more than $100 billion have been recovered because of this law across global jurisdictions, right? So that's the impact of the law, and that's why more and more countries are participating in this law by becoming a member of the OECD. Today briefly we will touch upon what is the law all about, some of the misconceptions, concepts, consequences of non-compliance, what is a self-certification form, one or two case studies on the subject as well. And any questions, happy to address that after the session. So FATCA and CRS is also known as automatic exchange of information. What briefly happens is that financial institutions which are prescribed, there are 4 types of financial institutions and we will cover that in subsequent slides. But basically the 4 are banks, custodial entities, investment entities and life insurance companies. These financial institutions, when they onboard customers, right, and when they are non-residents, at the end of the year we have to report the income and the assets that they hold, right, in the FATCA CRS return, and then the Indian government reports it back to the home country of that relevant non-resident. That's why it is called as the automatic exchange of information. And similar thing obviously happens to and fro. So the Cayman Island government will also report information to the Indian CBD. As on date, US government has intergovernmental agreements with most of the countries for FATCA purposes, and more than 100 countries are members from an OECD standpoint for CRS reporting purposes. We have recently concluded the filings for 2024. So FATCA CRS calendar year filing is different from the income tax returns, right? Income tax returns pertain to 1st April to 31st March, but FATCA CRS is relevant only from a calendar year perspective. So we report details from 1st January till 31st December. So for calendar year 24, the filings were done by the institutions on or before 31st May 2025. There is a specific portal that is prescribed, which is the Insights portal by the Indian Tax Office, where we have to file the returns. And why FATCA CRS is gaining more importance day by day is because the quality of data, what the Indian government is reporting to the other countries, is not up to the mark. And that's why there is a lot of pressure internationally that the data quality of financial institutions in India be improved. And hence peer reviews by the OECD keeps happening, and we will touch upon that as well in subsequent slides. And because of that, you would have seen in the last 2 budgets since 2023, there is always an amendment in relation to penalty from a FATCA, CRS and SFT standpoint. Yes?
While reporting foreign income in Indian income tax return, so you said that they are following April, January to December.
Yes.
So in while filing Indian income tax return for AY 26-27, you have to show foreign income of January to December or April to March 26.
No, so the foreign income that you have to disclose is for the Indian tax authority purposes, right? India wants to tax the income that you have earned from overseas. FATCA CRS is about what non-resident is earning from India, which Cayman Island or a US government should know so that they can tax that income there. So both are different. What will be relevant in your case is, let's assume you earn income from Singapore. So you will report that income in your income tax return in AY 26-27. And the information that the Singapore authorities will pass on to the Indian government or CBDT, Indian CBDT is going to reconcile that with your income tax return. And if everything matches, then it's fine. Else, you will get a notice, as well as the financial institutions who reported your assets or income will get a notice.
My question is that if you income from April 25 to March 26 or January 25 to December.
In your income tax return, April to March. Just a quick background on FATCA. The law was introduced in July 2014. US government entered into intergovernmental agreements with various countries to apply this law. While it applies to all non-US institutions, but there are obviously certain exceptions that are there, and most important ones are banks and entities who are listed. So conceptually, as I told you, there are 4 types of institutions that are there. But if the account holder of that financial institution is a bank, then you will not report that account holder. So as an example, in India, ICAI Bank is a depository institution. So FATCA CRS applies to it, right? Now ICAI, whenever it onboards customers as account holders, has to check whether they are residents or non-residents. If JP Morgan Chase Bank India branch has a bank account with ICICI Bank, ICICI Bank will not report JP Morgan as a reportable account. The reason is JP Morgan itself is a financial institution. So one financial institution does not report another financial institution. And the reason is simple, because every financial institution is as it is going to report all its account holders and customers. Right? Similarly, following suit after introduction of FATCA, there was a lot of pressure before the OECD, and finally they as well introduced CRS, which is Common Reporting Standards, right? And it became effective in 2016. India was one of the countries who adopted CRS early as compared to other countries that we see on the screen. There were initially only 49 countries who committed to CRS in 17, but now we have more than 126. So in India, the filing started from 2017. Now with FATCA CRS as a law, while it's been there since 2014 and 2016, in most of the countries, including India, the knowledge about this law is very limited. Not only with account holders, but also with financial institutions. That's what at least we have seen across last 4 to 5 years. And there are a lot of misconceptions and myths also in relation to this law. As an example, I will give you, lot of financial institutions believe that FATCA and CRS are one combined return to be filed. But that's not the fact. FATCA is a separate return, CRS is a separate return, form is the same, but you have to file 2 different returns for both. Most of them also believe that only US persons have to be reported, both for FATCA and CRS purposes. Again, that's not the fact. FATCA pertains to yes US, but CRS pertains to all other countries other than US. So the basic ones that we've heard across years is FATCA CRS only applies to individual account holders, which is again incorrect. Even if a bank's account holder is a entity like ABC Private Limited, the bank will report it if it's a non-resident. Similarly, there is a lot of misunderstanding that citizenship or nationality equals tax residency. We all here are chartered accountants, we all know that's not the truth, right? Both are very, very different. And tax per se, as we know, is all dependent on tax residency, correct? So date, place of birth, nationality, citizenship is different from tax residency. But yes, from a FATCA standpoint, only from a FATCA standpoint, nationality and place of work, if it is US, then you do report that individual as a FATCA reportable individual. Now what happens typically in a FATCA CRS context is, financial institution's job is purely to collate information from the account holder, do its due diligence and report it to the government. But we have seen that a lot of times financial institutions start advising the customer what they have to inform the financial institution about their tax residency. And tax residency as a concept, as we know, is different for each country, right? In India, it depends on the number of days for individuals, and for entities, it is dependent on the place of management. But that's not the case that may be there for other countries, right? Every country may have different laws, correct? And that's why the job of a financial institution is only to collect data and report and not advise customers in relation to tax residency, because it's a concept which is dependent on the laws of the relevant country. What we've tried to do is we've just highlighted some of the laws in Malaysia, Singapore, Hong Kong, which clearly shows that each country has different laws, right? So it is only and only up to the account holder to inform the institution what is the tax assessment of the account holder, and not the job of the financial institution. In terms of the relevant sections and the relevant rules, one major difference as compared to other countries and in India is that every other country has logically regime for FATCA and CRS, which obviously is not the correct way to look at it, but that's how CRS. The new section is 508, and similarly the rules are 114H to 140F to 114H. 114F deals with all the definitions that are relevant. 114G deals with what information has to be maintained and reported, and 114H is due diligence requirements. Due diligence effectively means that when a customer is onboarded, what are the activities that an institution needs to do, which is obtain the self-certification form or a W form we call for US purposes. You have to look at it from whether all the information is complete in that form and whether the form is reasonable enough to validate and to go ahead and onboard the customer. And then there is the penalty section where tax officers said that if you do not comply with the law appropriately or don't do proper due diligence, there shall be penalty. And we'll touch upon that in the next slide. This is the most critical part of the law, and there has been a major amendment this year in the
Financial institutions are required to file.
That's correct.
Whether banks are also required to file?
Yes, yes. 4 institutions: banks, custodial entities, life insurance companies, and investment entities. We'll explain each of them shortly.
If the US resident is reported in this FATCA, is not that individual account is not required to be reported in CRS.
Yes, that's right. Because he is reported only, FATCA is only for US, only for US. But any other country, like a Cayman Island, Luxembourg, Netherlands, Belgium, in CRS account. Now, before the budget amendment this year, there were 2 types of penalties which were there. Sorry, 3 types of penalties. One was for non-filing of FATCA CRS return, which was 500 rupees per day. It was discretionary penalty. This budget, what the government has done is reduced that penalty from 500 to 200 per day. And they have also capped this penalty to only 1 lakh rupees. So as an example, assuming 2018 में अगर एक financial institution ने एक return file नहीं किया, if we calculate the penalty, it's 500 rupees per day. So 8 years, 365 into 500 into 8, right? It's a huge amount that is leviable. The government has now capped it, saying you only have to pay 1 lakh, right? So they want to encourage financial institutions to file FATCA CRS returns and not make it a mammoth task. Similarly, if you've not filed the return, the tax office, as we know, issues notices as well. If you do not reply to those notices, there was 1,000 rupees penalty per day. That penalty has been kept stagnant, but again has been capped to 1 lakh rupees. So they want to encourage you to file even if you not complied in earlier years. The other penalty was 50,000 rupees in relation to wrong reporting or inaccurate reporting done by the financial institution. And the major change that they brought in 2023 was that if a customer gives an incorrect information to a bank, let's assume, and the bank does not do its due diligence properly and reports that customer incorrectly, there was a penalty on the financial institution of 5,000 rupees per account. The institution can recover that money from the customer because it was the fault of the customer. But we all know that typically does not happen, right? In a life insurance context or a investment entity context like mutual fund or AI. A bank may still would want to recover by blocking the account, but for other institutions, typically not possible. This was the change because of which this law has again gained a lot of importance since 2023. Now surprisingly and intentionally as well, frankly, the government has not made any amendment to this penalty, because while they want to encourage you to comply with this law, they want to discourage any incorrect filing. So they are wanting to ensure that everything in terms of due diligence and reporting is properly done by the institution. There is no leeway for that by the government. And just to place the importance on what this penalty means is, today if Sumit Padia has 5 bank accounts with ICAI Bank, and I give some wrong information to him about my tax residency, and he reports me, and that's incorrect. 5,000 rupees is per account. So if I have 5 accounts, that means 5,000 into 5. So 25,000 for one person's incorrect reporting. That's the impact of this law. Coming to peer reviews. Now, while the law has been established since years, how do the authorities really ensure that everything in terms of complying with this framework is being done? So they have peer reviews. Peer reviews means OECD asks tax authorities of one jurisdiction to go into another jurisdiction and on a sample basis verify the data that has been filed by the relevant country. And basis that data that they review, verify, they give a rating to that country, that what is the quality and compliance that country is undertaking. So that's what peer review is, and it has had a lot of impact because India as a country was given a rating below par, I think 3 years back, and that's why there were severe changes in the law. And since then our track record has been only going better. If we see this slide, we've just outlined some of the countries, and you will observe that at least in 2025, India is on track in terms of applying the legal framework and also the review of the data that we have filed, right? So we are on track in terms of the expectations of the OECD. 2 years earlier, that was not the case. And the reason primarily was our Prime Minister, as he keeps traveling in terms of foreign direct investments and meeting member countries, there was a lot of pressure that he was facing in terms of the poor quality of data that was being presented by Indian tax authorities to the overseas authorities. I'll hand over now to my colleague Tahir to take you all through what conceptually is the 4 financial institutions, right? What is a financial account, etc. Any questions we'll be happy to address.
Sir,
Thank you, Sumit.
NBFC is not covered, right? Only banks life insurance.
No, so 4 types as I told you, right? So one is depository institution. So banks, anyone who accepts deposits. So banks covered. If our NBFC is a deposit taking NBFC, then it will be covered.
That depends on the facts of the case. We'll have to debate. So as Sumit explained, that a FATCA CRS compliance law has to be undertaken by the reporting financial institutions. So in order to understand the entire FATCA CRS framework, we have to understand 3 questions. Who will undertake the FATCA CRS reporting obligation? Second would be how they will undertake the reporting obligations. And third would be what would be reported exactly to the tax authorities that will subsequently be reported to the foreign jurisdictions and vice versa. The flow is first the reporting financial institutions will review the financial accounts which are maintained by all the customers. They'll identify whether any of the accounts are reportable or not. And once they identify it, they report it in Form 61B, which is a typical return for the FATCA CRS in India. Thus, the initial starting point of FATCA CRS is from the financial institutions, and it is very important to understand who is required to do the reporting. Any entity in India has to first identify whether they have any reporting obligation or not. And for that purpose, they have to do a proper entity classification. The classification is such that first, any entity has to see whether it is a financial institution or not. If it is not a financial institution, it will be a non-financial entity, which is an NFE. Financial institution is further classified into reporting financial institution and non-reporting financial institutions. The non-reporting financial institutions are such FIs, which are typically FIs by nature, but the government has exempted them from reporting. The reason being, if you see the examples, it is a government entity or an international organization or central bank. These entities are typically government owned, and the chances and risk of having accounts which may be used for tax evasion is comparatively less. They are for a non-commercial purpose. For reporting financial institutions, like Sumit said, there are 4 categories. First is a depository institution. Depository institutions are institutions which accept deposits in the ordinary course of banking or similar business. Typical examples would be bank. The next would be custodial institution. These are the institutions which hold financial assets on behalf of others. For example, a bank offers a demat account. The shares are held for other customer by the bank. Third would be investment entity. These are typically the AIFs, the investment managers, the mutual funds. All this comes under this category of investment entity. The fourth would be specified insurance companies. This would include the life insurance companies who offer products which are investment linked. So these are not purely life covered policies, but policies which have an investment element in them. Typical example would be a ULIP policy. Once you are done with the classification of FI, once you have classified that you are an FI, you will go into reporting and you will go ahead and apply the due diligence procedures. If you are not a financial institution, the next relevant category for you would be an NFE, which is a non-financial entity. NFE is further divided into active NFE and passive NFE. Active NFE has various conditions A, B, C, D. If you fall in any of those categories, you will be classified as an active NFE. If you don't fall in any of those categories, you would be automatically be covered as a passive NFE. Passive NFE comes to very important because if you are a passive NFE, then controlling person comes into picture. Controlling persons are typically the UBOs in terms of AML and KYC, what we understand is the ultimate beneficial owners, where we disregard the entity and we also deep dive into who are the individuals who actually control these entities. For active NFEs, there are basic conditions. One condition that we can check is the income and asset test here, where if an entity has income which is a passive income and it is less than 50% of its total income, plus if hold assets that primarily produce passive income, if they satisfy both of these conditions, which is less than 50, then that entity would be an active NFE. Similarly, if you are a listed entity or related to a listed entity, then in that case also you will be classified as an active NFE. If you don't satisfy any of these conditions of active NFE, automatically will get classified as a passive NFE and you will always have to report your controlling persons. This classification is crucial and it is the starting point of FATCA CRS compliances. Because once you are identified as an FI, you will have to perform the due diligence procedures and you will have to go ahead with the reporting. If you are classified as an NFE, what you'll have to do is whenever you coordinate with any of the FIs to open an account, will have to give your classification as a NFE, whether you are an active NFE or you are a passive NFE. Along with the passive NFEs, you always have to report your controlling persons. These are the four type of financial accounts which every financial institution will maintain. First is a depository account. This is relevant to a depository institution like a bank where they accept deposits. Second is a custodial account. So typical example would be a demat account where you are holding custody of a financial asset on behalf of someone else. The third would be debt and equity interest. These are investments made in forms of shares or a unit in a trust or a mutual fund. Fourth will be a cash value insurance and annuity contract, which I explained earlier that life insurance products that purely cover risk policies are not covered here. But those policies which have an investment portion, which is called as cash value, will always be covered here. Those policies which always will have a termination value will get covered here. Now, once you identify that yes, you are a reporting financial institution, what you are supposed to do? You are supposed to undertake due diligence and compliance requirements. How will a bank identify whether any of a customer is a tax resident of any other jurisdiction or not? That thing has to be done at the time of onboarding, because once a customer is onboarded and you don't take the relevant information, the customer is gone. So, at the time of onboarding, for all the individual and entity customers both, you have to obtain a FATCA CRS self-certification form, commonly known as FATCA form, FATCA declaration and name. This self-certification form is the prima facie document to determine whether any of the customer is a tax resident or not. Because this form requires each of the customers to declare their foreign tax residency. First, they have to collect the form. Second would be to determine the tax residency. And third, and the most important thing is, which many banks and FIs neglect to do it, is to validate the self-certification form. Just collecting the form and filling the information is not sufficient. You have to validate that form from many factors that we'll discuss later to determine whether the form is valid or not. The effective cutoff date, like Sumit explained, was July 14 for FATCA and January 16 for CRS. Yes?
You mentioned that this needs to be done at the time of onboarding of a customer.
Yes.
But every year the tax residency status may change.
Yes.
In that case, how to compare?
So, if you will cover this in the next slide. This is the typical format of a FATCA CRS declaration. This is specific to individuals. We have a separate form of entity as well. If we go in detail here, there are basic details which helps the FIs to determine the tax residency. For example, here the field says residence for tax purposes. If a person mentions India here, it is fine. If he mentions Singapore, then they will ask for a TIN for Singapore. Here is a TIN column and a country of issue. So if a person is a tax resident of Singapore, he will mention Singapore and he will give a TIN of Singapore. If he is a US person, he will select this yes and yes. So the bank will know that this person is a US tax resident and they will report it in FATCA return. There are other terms and conditions where one very important condition is if there is any change in any of the information that the customer gives at the time of onboarding, he will have to report it to the financial institution. So the onus is of the customer that if there is any change in his address, within 30 days he has to submit it to the bank. Then only the bank will come to know about any change, and accordingly if that change impacts the reportability, they will change the reportability of that particular customer.
Okay, but what is the
this type of information is not asked on a yearly basis like a KYC is done by the bank?
So some financial institutions do a re-KYC for after 3 years, but still within this gap of 3 years also there may be a possibility that you may have a change. So it's always the onus of the customer first to reach out to the banks and update their information.
But maximum, in most practicality cases, the person who's opening the bank account would not be ideally reading in most of the population.
Yeah.
तो यहाँ साइन करे, यहाँ साइन करे, यहाँ साइन
That is why we are here to train the personnel who are doing the onboarding, to inform the customers everything. Similar case for entities. So if you see the entity also, they have to select the classification that we discussed in the earlier, whether they are in government entity or an international organization, whether they are a financial institution or not. If they are a financial institution, then they won't get reported, as Sumit explained earlier. Here also, if we see an NFE classification, they have to select whether they are active or passive. And if they are passive, they have to report the details of the controlling person.
Can you give one example of this NFT? Like,
NFE, yeah. So
can be an example, can be a trust like controlled by others, like who is the beneficiary will be the controlling person.
so for,
Let's go to the case study.
this one.
This is it. Yeah.
Pick it up later then.
No, no, let's take it up now only.
Okay. So XY Limited is a customer of FI. There is XYZ Limited. It is in Hong Kong. It is a passive NFT, classified there. XYZ Limited is a tax resident of Hong Kong. XYZ Limited declares it as a passive NFT. So once it declares itself as a passive NFT, it will have to report its controlling person. Controlling person has to be a natural person. It cannot be an entity. If it is an entity, we'll have to go beyond deep dive and identify who is the ultimate person. If there is a dead end where you can't identify any single person, then we'll have to report the senior managing official of the entity, which we typically call as the SMO. This is the basic rule for a controlling person. It has to be a natural person. So in this case, XYZ Limited is controlled by holding company 3, which is in turn held by holding company 2, and which is in turn held by holding company 1, which is in Cayman Islands. And this company is in turn held by Jersey Trust. We have to identify the ultimate controlling person. For a trust, the controlling person would be a trustee. That can be an individual. So the XYZ Limited will have to give detail of the controlling person, which is the trustee of the trust. That is the ultimate controlling person. At this level, FATCA CRS expects the entities to provide the information for tax transparency. So if the trustee is a foreign tax resident, that trustee would get reported under the name of XYZ Limited. So XYZ Limited is a Hong Kong entity. Entity will get reported separately, but here they identified a controlling person to be a tax resident of another jurisdiction. They'll have to report them as well. Yes, sir. This is where the entity is required to give the details of the controlling person, the name of the controlling person, correspondence address, tax residency, TIN, and controlling person type. All these fields are relevant for reporting purpose.
So it's a natural person, right?
Sorry?
Natural person, right?
Natural person, it has to be an
In
individual.
terms of percentage, shareholding or any
Yeah.
benchmark.
Yes, that is also there. For AML KYC purposes, they have certain benchmark for a controlling person. For example, for a private limited company, the controlling person interest should be 10%. For a trust, it could be more than 25%. That is how a criteria is given in the SEBI circular.
For a public listed company,
Listed companies, you don't have to identify a controlling person. That's an exception given.
yesterday only it case happened to me, bank was asking for that.
Sorry?
Yesterday only it happened, bank was asking for, I was talking about same thing. I have 40,000 public shareholders, why you are talking about?
Yeah, so in listed company, you won't need to find the controlling person. That's an exception given there.
No, so listed company is an active NFE as we discussed. And listed company being an active NFE is exempted from reporting. That's right. Thank you.
No, but in trust, they will not be shareholding. So what interest?
Controlling interest. To trust, who controls the trust? It's a trustee. So,
Percentage?
no, the percentage would be specific. That would be depend on the type of entity. For example, in a private limited company, the control and ownership would be by shares.
Trust, again.
Yeah,
Trust
that's
is settler, trustee, protector.
तो percentage तो उसको नहीं होगा। हाँ, वही He's talking percentage for trust also.
No, not for trust. So it depends on the nature of the entity. So if it's a company, then the control is determined by shares.
Trust only trustees are the controlling person.
Trustees are the controlling person, beneficiaries and settlers also do get reported because they may also have a control on the trust and the operations of the trust.
But that will all depends on the residential status of this, either the trustee or the beneficiary.
But the law states beneficiary has to be reported.
They may not have trustee decide.
ट्रस्ट के केस में 4 people are to be reported. Trustee, settler, protector, beneficiary.
Yes, सबको.
Different category. They are trustees, they are beneficiaries.
उनका tax residency status देख के
They have to disclose the details, and if any of them are foreign tax residents, then they'll have to report. They need to have the information in the records. So once the bank obtains the form, bank is not done away with their responsibilities. They'll have to first check with 2 checks. First, whether the form is completely filled, it is signed and it is dated. And the second would be a technical part where the bank would determine the reasonableness of the information that is given by the customer. So what would happen is if a customer acts smart, he is a tax resident of Singapore and he doesn't want to disclose his tax residency of Singapore. What he will do, he'll just mention India as his tax residency. But he would have given a Singapore address. In this case, the bank need to ask this question that you have not declared your tax residency of India, but you have given a Singapore address. Can you explain the reason for not declaring a tax residency of Singapore? Bank is not expected to sit and ask the customer how many days were you in India, are you an actually tax resident of India or not. But the corroborative information that they will have to review it, and they will have to specifically ask questions about the validity of those information. So here in the given example, if someone has given tax residency of India, but they have given a communication address of Singapore, for which the bank will need to have a reasonable explanation. What could be reasonable explanation, sir? For example, the person was a student, but he said that I am going to Singapore just for studies, I am doing my masters there. I am not paying any tax there. That is why I have given my tax residency as India. This seems to be a justified explanation, and basis that the bank can proceed and validate the form. If the bank feels that the information is not sufficient, and here's the dangerous part is, if the customer is not providing any explanation, बोलता है मुझे कुछ नहीं देना है, मैंने जो दिया है वो सही है, but bank को उस पे doubt है that this information is not correct, he may be a tax resident of Singapore. Bank can go ahead and report him to Singapore authorities. So it is his responsibility to answer to the questions that the bank asks, basis their reasonableness test. So there are certain obligations on the account holders. Is first that they have to provide a self-certification at the time of onboarding.
Excuse me.
Yeah.
The bank will report to the Singapore authorities.
Bank will report to the Indian tax authorities. The Indian tax authorities will report it to Singapore. No. It's because of the confidentiality. It's that the government has mandated it, so they can report it to government, and then government will give it to Singapore tax authorities.
So there's something called as reporting model 1 and reporting model 2. Countries who are reporting model 1, they have to always report FATCA CRS information to their home country's tax authorities. Reporting model 2 will directly report it to the relevant country. So like Bermuda doesn't report to Bermuda authorities, they directly report to the relevant country. But India is model 1 country, that's why they will report to the tax authorities in India, and Indian tax authorities will report to the relevant country.
So in the example I just gave, address was one of the indicators which helped the bank to determine reasonably that a person could be a tax resident of jurisdiction outside India. Similarly, there are multiple indicators which in FATCA CRS terms we call as indicia. In this case, since the bank found an address indicia, it raised a question, and if they didn't give any clarification, they went ahead and reported to Singapore authorities.
Onus is on the account holder, but I have seen the cases where just even account holder is informing that I become a non-resident, convert my regular account to NRO account, NRE account, whatever application.
Right.
So is it suffice? Since bank is not asking to fill this FATCA CRS form, whether it suffice, because we already informed to bank if I become a non-resident.
In that case, it's the bank's obligation to obtain a FATCA form.
but there are a number of non-residents are there who
Yeah.
are still declaring themselves as residents and not opening the NRO account, NRE account also. Then what is the option?
Bank has to rely on the documents that they have on record. So if any of the KYC documents has any foreign indicia, then they need to ask the question. If they're not asking, then it's the bank's fault. Yes?
Sir, we had a session in this study circle itself some months back.
Yeah.
The biggest point of doubt between the client and the CA, the professionals, and the fraternity is the definition of a non-resident in FEMA versus definition of a non-resident in income tax.
Mhm.
That is still not clear, and it will never be clear because in India, the partner nation building,
Yeah.
who is the economic depository of knowledge and wealth and fighting with the government on issues, not on political issues, on economic issues,
Okay.
is sadly sad. Yesterday itself, just as this gentleman said, this is the biggest point of a shippy, a person working on an airlines, a pilot driving an Airbus, 182 days abroad, non-resident as per Income Tax Act. What is the status as per as per FEMA? No clarity, no FAQs. And if a pilot on a plane he gets married to a foreigner, प्यार हो गया abroad, शादी का गिफ्ट आया, अब्रॉड भी शादी किया, परदेश में, इंडिया में भी शादी किया, इंडिया में बड़ा आदमी है, पायलट है, काफी सुंदरियों के साथ घूमता है, तो लोगों ने गिफ्ट दिया, just because he's got an NRE account, NRO account, banks, the leading bank, I don't want to name this bank, I am taking a panga with them, with RBI, hot news. I said, give me a circular, as per para 6C, I don't know, there is a circular of RBI about credit to NRO account. I have told him this is not applicable as per the circular itself. He says there is no clarity. I said you take the clarity. Why are you not crediting my 45 lakhs rupees of checks? Converting in INR. He's got it in from a non-resident to a non-resident. You should not have a problem. They want him to sign a declaration. A resident of the same bank to the same guy in the same bank. They're not willing to credit. Please sign this declaration. Written apology here, appear. So nobody wants to fight the battles of the common man. This goes on and professionals अपना रोटी सेक रहे हैं. Sorry to use this word. It's wrong. The clarity has to be in the law.
Yeah. But that is how it is, sir. So
No, then who will change it? If we are talking about Viksit Bharat, sorry, I beg to differ.
So they have given some leeway. So it's a custom.
Sir, leeway should stop at the jurisdictional officers level. Sorry to say this. We're talking about governance, transparency. When will this stop? This gentleman is flying back on. I told him, forget your checks, तू जा honeymoon माना. पैसा तेरा credit मैं जिम्मेदारी लेना. मेरे को कुछ नहीं. I'll fight this. It's a ego issue now between the bank and me and RBI. Huh?
Close the bank account.
No.
Close that account and close it forever. Don't deal with them.
Well, I was thinking on that line, but now no. No, I agree with you. Sir, I agree. And let me tell you now, publicly I am saying it. HDFC Bank. Sorry, I am going offline. But the leading bank in the country don't know how to interpret the circulars of RBI.
You are the master, not these are the
Yeah, but in FATCA CRS, if there is a sufficient cause and reasonable explanation given
So
for
once
the
again, for the shippies,
yeah,
the people on employment,
there is
no, there is a blanket exemption.
black.
Even in FEMA.
Yeah, in FATCA CRS also. So, for example, if there is a mariner, he may not have an Indian address, he would have given a foreign address. In that case, when the bank questions him, he can give a reason that I am a mariner and he can give a CDC as a proof. That is sufficient to not report it.
But this clarity has to be there in the RBI circular. No, this circular is 2011, sir.
Yeah.
2011 का circular दिखा रहा है.
He is not listening, just close the account and close.
नहीं सर उसको बोला है अभी सब पैसा अब्रॉड ही रख इधर आने don't disclose we'll take it offline. No, this is where unfortunately I regret to take you off digressing the topic but on a very nice topic but you know આપણે CA લોકો શું છે ખાલી सब रूल प्रोवाइजोस एक्सप्लेनेशन अरे यार मुद्दे को सॉल्व करो ना फाउंडेशन ही नहीं है
सर ये જ આપણે કરીએ છીએ ટ્રાય કરીએ છીએ આપણે
ऑल द बेस्ट
Thank you, sir.
I'm sorry to interrupt you.
No, no issue.
Please pardon me.
Yeah. So when the bank reviews the form, they have to look for indicias. The relevant indicias for FATCA and CRS are the tax residency, the address, place of birth, citizenship relevant to US, the telephone number, standing instruction. If the customer is given a standing instruction to deposit certain amount to a beneficiary account, then the location of that beneficiary account would also be relevant, and that would also be an indicia. A power of attorney issued in favor of someone, then the address of the attorney holder would also be relevant indicia for a bank. So at this level, the CBDT expects the financial institutions to do due diligence, identify any foreign indicia, and then report if there is no accurate clarification. Similarly for entities, the place of incorporation of the entity, the address of the entity, the tax residency plays an important indicia role. Now CIC, like we discussed this earlier only. So in case of CIC, it is the onus of the customer to inform the bank or the relevant FI that there has been a change in the financial information or demographic information. The bank still will have to obtain a fresh declaration and verify it from the reasonableness perspective, and then accordingly determine the reportability. The moment the customer informs the bank about a change, there is a 90-period window given. It's 90 days from the date of intimation or end of calendar year, whichever is later. Within this period, the bank has to determine the final reportability for that customer pursuant to the change. So the impact of change will also have to be assessed by the bank, by the FIs. Now, once the determination is done, we have a set of record where we know all our investors whether they are reportable or not. The next step would be to report it. So if a financial institution is considered to be a reporting financial institution, it has to definitely register with the income tax authorities. The relevant portal is Inside Reporting Portal, where they will have to obtain an ITDREIN number. That number would be effectively used for the reporting purpose. Separately, they also have to obtain a GIN, that is Global Intermediary Identification Number, where they have to register with the IRS and obtain that unique number, which is also included in the reporting of India.
Is this the same ITDREIN which is used for accepted return?
Yes, 61A. But you have to select 61B specifically for that. You'll have to review all your 4 financial accounts, identify which accounts are reportable.
61B is the income tax form or what is it?
61B is FATCA form, FATCA and CRS form. So 61A is for certain kind of SFT transactions we would have seen. 61B is for FATCA and CRS purpose only. For FATCA, you'll have to file a separate return, for CRS a separate return. You'll have to, so it's a big utility where you have to fill the name, the address, tax residency, date of birth, account number, and here come the scary part, the account balance, gross amounts and the total gross proceeds. This is the information which every jurisdiction craves for their foreign tax residents. Specific considerations for account balances. So account balance, you will report it for the 31st December of every reporting period. If there is a joint account held, so there is person A and person B, both have a joint account and the balance is 1 lakh. And if both the persons are reportable, then you won't report 50,000 and 50,000 or 60 or 40. You will have to report 1 lakh and 1 lakh for each of the account holders. If there is more than one jurisdiction, for example, if I hold tax residency of Hong Kong and Singapore, I'll have to be reported in both the jurisdictions with the same balances. If the account was closed during the year, then you will also have to report that account, and the balance immediately prior to closing is required to be reported. One is the account balance, second one is the gross amounts that is paid in that account during the year. That would include interest, any dividend that is being paid, or any other income that was paid during the year, during the relevant calendar year. So we will take forward.
Thank you, Tahir. So I think after all the conceptual discussions that we've had, finally this is how it works in terms of sharing of information, right? So as we can see on the screen, Indian financial institution like a Bandhan Bank has an investor or an account holder from Singapore. His income and his assets will be reported by Bandhan Bank in the FATCA CRS return, and it will go to the CBDT. Indian CBDT is going to then pass on this information to Singapore IRS. And similarly, if an Indian tax resident is earning any income from Singapore, Singapore tax authorities are going to report it back to the Indian authorities. And the purpose of all this, as we discussed, is both authorities will then reconcile whether that relevant person has also reported that income in the home country. Now, one of the discussion points that is very critical, which we have not included in this slide, because that's a discussion that can take days and we will not have an answer, is in relation to TIN validation. So all this boils down to whether the financial institution has the tax registration number of the non-resident or not. And all the issues today that we are facing on FATCA CRS is in relation to TIN. So just conceptually, like in India, a PAN has 5 alphabets, 4 digits and 1 alphabet. FATCA CRS as a law does not want you to check a document and verify the exact correctness of the PAN number, but they want you to check the structure of the PAN. Till the time the structure is fine, tax authorities are fine, globally, not only in India. And today, since the law has come, because of lack of knowledge that the institutions had, for old accounts people don't have a TIN. For new accounts as well, customers avoid providing TIN, but धंधा तो रोक नहीं सकते, तो banks भी account खोल देते हैं, life insurance वाले policy issue कर देते हैं, and that's why lots and lots of issues in terms of data quality, and that's why the penalty.
So for Indian purposes, does a PAN get stand-mounted as a TIN or a passport number gets stand-mounted?
Every country has prescribed what will be accepted as a TIN. India में सिर्फ PAN है, UK में NINO number है, national insurance number, and there is a tax identification number as well. Some countries have 4 types of TINs. So it all depends on the relevant country, and all this information is there on the OECD website, country-wise country.
Okay, because one of my clients, he said that he has given the passport number but not the PAN number to the bank authorities there. So that is that the data traceable?
See, PAN to India purpose के लिए चाहिए ही, but TIN you need of the foreign country where he is taxes.
No, what I'm saying is I have a client who's in Singapore. अभी वहाँ पे जहाँ TIN मांगा तो उसका पासपोर्ट नंबर डाल दिया, उससे PAN नहीं डाला.
Right.
तो क्या वो डेटा Indian authorities will be able to link with the passport number or?
So if you're talking from the reporting of an India standpoint or Singapore
From
standpoint?
Singapore का reporting standpoint which will go to CPT.
So then he has to provide their PAN.
PAN, not the
Because Singapore के लिए foreign tax identification number is the PAN. So before we get into the next slides, just 2-3 basic questions, right? So after all the discussions that we've had today, if I, an Indian tax resident, Sumit Padia, goes to ICAI Bank, do I need to give a FATCA CRS form?
Yes, but mentioning as an Indian.
I need to give?
Yes.
That's correct. So bank has to obtain a FATCA CRS form from everyone, right? There is no exception. Form देखने के बाद पता चलेगा tax resident है कि tax resident नहीं है, right? So whoever, a lot of people go to the bank and say मुझे क्यों दे रहे हो? Everyone has to fill that form, right? And in terms of data quality that I have been talking again and again, right? Data quality is not only in relation to the TIN, but generally also there are a lot of issues, and I will give you an example also. एक पर्सन का 31 दिसंबर को बैंक अकाउंट में बैलेंस 5 करोड़ रुपए है, बट इंटरेस्ट सिर्फ मिला है 1000 रुपए, एज एन एग्जांपल. टिपिकली दैट विल नॉट मेक सेंस, राइट? बिकॉज आप सोचोगे 5 करोड़ का बैलेंस है, इंटरेस्ट हाई होना चाहिए अमाउंट, पर ये भी पॉसिबिलिटी है कि लास्ट डे पे अमाउंट डिपॉजिट किया हो, एंड दैट्स व्हाई इंटरेस्ट इज लेस. सो दिस काइंड ऑफ एनालिटिक्स आल्सो नीड्स टू बी डन, राइट, before someone files a FATCA CRS return. And these are the very things also which tax authorities globally also check. In addition to the other data issues that are there in terms of reporting, like सुमित पाड़िया के 10 अकाउंट है, बट एक में टिन नंबर अलग डाला है, एक में टिन नंबर अलग फाइल कर दिया है. Not various types of issues are there in terms of data. So financial institutions and your clients, and if you are from financial institutions, very important that data is clean and cleansed, at least going forward, right? Because penalty is only going to be levied by the tax authorities. So to just showcase that, I think we have a small video for everyone. What I want you all to do is, basis this video, tell me how many passes of the ball does the white team make. You should focus on the number of times the white team passes the ball. Yes. What's the count? 13, 14, 17. एक बार और कर लें, फिर से काउंट करें. Thirteen is correct, but that is not the purpose of this video. Now let's see again what. We will not focus on the ball now. Just see what is wrong in the video. What is different in this video? Don't focus on the passing of the ball. You are seeing a man dancing around and going away from the video. Did anyone see that? Right? So that was the purpose actually of this video in relation to data. Right? Everyone in financial institutions, right, they are so bogged down with whatever they have to comply.
Yes.
And the volume of the data, right? Today I can tell you the South Bank, they have voluminous data, 15 lakh non-resident account holders. So, I mean, empathy to them, but it is crazy, right? To maintain and to clean that data. And that's why this video, that looking at the larger picture, I mean, if we are given one objective to look at, we miss the other entire picture that we have, and that was the purpose of this video. So data quality is very, very important from a FATCA CRS standpoint. Similarly, this next picture that we have, what is different in this picture?
Only one black.
One black.
There is an anomaly in this
Yeah.
picture.
Panda.
That's right. The panda, right? Again, emphasizing on data, right? Out of so much data that institutions have, it's difficult to find where the issue really is. And that's what we have seen, right, in terms of conversations that we've had with financial institutions. If you see, data is the biggest challenge that everyone is facing in terms of cleansing it, in terms of quality, in terms of collating it. That's the biggest challenge for all the reporting financial institutions. This is the case study. I think one of the case studies we've already covered. We'll quickly cover this as well. So if a bank has a Japanese account holder, the bank will report that Japanese account holder to the Indian authorities, unless that account holder is exempted, right? If it's a financial institution or it's a listed active NFE, then you will not report. Similarly, the second example, the bank has a customer from UK. It's an entity which is a passive NFE. Passive NFE, as we discussed, is reportable. But along with that, we also have to report the owners of the passive NFE. In this case, the owner is a Australian tax resident. So we will report the UK entity as passive NFE along with the controlling person who will be Australia. So the report is going to go to two people. This is a case study we've already covered. And lastly, we come to some of the do's and don'ts for financial institutions, which could be your clients or you could be stakeholders of the financial institutions. Some of the important do's is you have to obtain a FATCA CRS certification form. It is very important from a validation and reportability perspective. Reject applications where the form is not proper. Train your staff and obtain a new self-certification form when there is a change in circumstance. Now, as Tahir said, the duty is of the account holder to tell you that something has changed as compared to what he provided as a self-certification form. But there is also an onus that if you in any manner as an institution come to know that Tahir tax residency has changed from Australia to UK, then it is also the duty of the financial institution. And some of the don'ts which no institution realizes is, mostly in a life insurance context I have seen, policy खोलने के time पे policy holder को information नहीं पता है तो insurance company बता देता है क्या करना है. सर आप इसको blank रख दीजिए, इसको ऐसा fill कर दीजिए. That is not supposed to be done. We are not permitted as an institution to advise from a FATCA CRS standpoint to account holders or policy holders. Verbal confirmations again not acceptable at all. Everything has to be in the self-certification. I think that was it in terms of today's session. If any questions you have, happy to address it now, later, whenever convenient. Hope the session was helpful.
For insurance policies, we have to implement them if you become an authority.
Yes, yes. So when you are opening, so term policy, see, policy कोई भी हो, policy open करते हैं FATCA CRS declaration देना है, कुछ change होता है तो भी देना. That is up to the policy holder. Read any type of policy, term policy, endowment policy, कुछ भी हो. Term policies are not reportable policies. That is different.
So,
Yes.
The particular year is a non-resident, and not of 182 states less than what in one country balance of other countries. In such case, what the person?
See, his tax consultant will advise him where he is a tax resident of. You have to see his tax residency as on the last day of the calendar year. Yes.
Sir, what is the difference between SBO and UBO? Because we get the same organization chart from a parent entity. So, what precaution, like how we have to read that document?
I think now you are meaning SMO, Senior Managing Official.
SBO and significant beneficial owner, which is under Companies Act. We have to.
No, so Companies Act is not to be looked at. Companies Act is not to be looked at. Controlling person is defined in the Income Tax Act as well. AML KYC purposes, like he said, I think 10% for private companies. So you have to follow that. Companies Act, FEMA, not to be looked at. Yes.
Sir, you said that AI also needs to report. AI also needs to file this FATCA. So, umbrella trust under the AI, they need to file that FATCA.
The PAN is under which name?
So, umbrella trust also having a PAN, is also having a PAN.
Both have to file.
Under PMS, PMS need to file this FATCA CRS.
What does the PMS exactly do?
So, entity having a PMS license, so they need to file this FATCA CRS for their.
If they are managing financial assets on behalf of anyone, then they have to. And they should have the discretionary authority to buy and sell. If they are having it, then they have to. If they don't have discretionary authority and they are only advising non-binding,
So, you said that under PMS, deposit
नहीं, so if an entity is also a depository and also a investment entity, तो दोनों आपको एक साथ रिपोर्ट करना पड़ेगा। इन्वेस्टमेंट एंटिटी के कॉन्टेक्स्ट में डिफरेंस ये है, लाइफ इंश्योरेंस, बैंक एंड कस्टोडियल हैव टू रिपोर्ट अकाउंट होल्डर्स, इन्वेस्टमेंट एंटिटी हैज टू रिपोर्ट इक्विटी एंड डेट इंटरेस्ट होल्डर्स, सो अपने शेयर होल्डर्स या डेट इंटरेस्ट होल्डर्स को रिपोर्ट करना पड़ेगा।
So if the company is an active NFE, then the reporting by the bank will be only for the company's residential status,
That is correct.
not for the controlling.
That is correct.
If it's a active NFE.
That is correct.
Last question.
Is it mandatory for FIs even if there are no transaction or nil return is there?
Nil return is mandatory. Thank you everyone.
Thank you very much, CA Sumit Padia ji and CA Tahir Siddiqui for this wonderful presentation. Now I request my colleague CA Bijal Joshi to propose the well-deserved vote of thanks.
Thank you. We extend our sincere gratitude to both the speakers for the day, for their valuable insight on both the topic FATCA as well as CRS, enhancing our knowledge in the field of global taxation, also throwing light on who will report, when will report, even as sir just highlighted, even nil returns are important. Apart from that, the detailed presentation given how we need to classify the transactions. With this, we would like to thank you for your time and expertise and your detailed presentation. Thank you so much.
Just 2-minute break for the changeover. We'll just start the session immediately.
अटेंड तो करे यार, इतना क्वेरी पूछता हूँ।
We request members to please take the seats. Attendance sheet will be given at your seats only. Please be seated. We are commencing with the next session. Speaker is already here. Please be seated. Attendance will be coming to your place.
સર એક મિનિટ ચાલુ કરવાનું કોને કીધું હતું તમને?
Thank you.
હવે ખરચ વાપરી નાખવાનું ક્રેડિટ ડેબિટ
તમારા